Everyone's been talking about AI stocks, but here's the crazy part. Nancy Pelosi bought into one of these way back and in a number of years is up over 935%. And now Congress themselves are starting to pile in to this exact stock, as well as 6 other AI companies that you need to know about. And these are official disclosures, not rumors, and we've been tracking exactly what they're buying, and this is what we're going to get into the episode today. And you might be thinking, why do we care so much about members of Congress? Well, just look over the last few years, they've outperformed, and by quite a massive margin. Not just in 2024, we see the same in 2023, 2022, and 2021. In fact, as far back as the data goes, the conclusion remains the same. Members of Congress not only outperform, but they also have, as noted here, exquisite timing. Now, this article particularly relates to when COVID happened and how members of Congress really knew when to buy at the right time. But it isn't just during COVID, we're not talking about one-off events. For example, we have here a few years ago where there's traction really highlighting that members of Congress have what is noted as strangely good timing. And the key thing here is that they outperform the markets, and as highlighted sometimes by huge amounts. We just highlighted some years we're talking triple digits, and this is something that not only we see every single year, but is also expected to continue, because whilst there is a ban on insider trading by members of Congress, which is ultimately called the Stock Act and was passed 13 years ago, the only penalty that members of Congress get is really a slap on the wrist, also highlighted here as $200, which, let's be honest, is not really any kind of meaningful deterrence. So rather than complain about members of Congress continuing to outperform, one thing investors can do is look at the likes of Nancy Pelosi with her huge gains and see how they can trade like her. In fact, some copycat investors, as we've seen in the media, have been pretty much following her trades when they get the information, and they're also up a very significant amount. Now, if you're someone who also wants to do the same, there are some ETFs, whilst the information isn't available at the exact time that these members do buy, as there is a delay. There is the NANC, the Democratic Trading ETF, which is up over the last year 25%. We would highlight though the expense ratio a little bit on the higher side at 0.74, and that also applies to the Republican side ticker symbol GOP, where it is also up in the last year 18%, expense ratio equally as high. But ultimately we want to compare that against the S&P and the QQQ, and if we look year to date, so we're just talking about the first 8.5 months this year, NANC as well as GOP have both outperformed the S&P 500, although very marginally lag the QQQ. And if we stretch to the last year, a fairly similar conclusion. Both of them have very marginally outperformed the S&P, but actually lag behind the QQQ. Something just to consider. Ultimately, this is looking at the Democrats as well as the Republicans as a whole rather than an individual basis. And ultimately, remember the main reason why investors like to look at individual investors. For example, Nancy Pelosi, she continues to massively outperform in the last 10 years, up 767%, whereas the S&P itself much lower at 247. And whilst there are calls to ban Congress trading given how much money they are making, which ultimately many people see as insider trading, they have information that the general public is unable to obtain. It doesn't look like anything is happening anytime soon, and Nancy Pelosi has been noted in 2024 alone to have made up to $43 million. Today's video is sponsored by Snowball Analytics, and they are much more than just a portfolio tracker with a ton of features that you can use on the platform. We also like the fact their user interface is very easy to use, very quick to consume. You can see your portfolio broken down on a sector by sector basis. You can note which companies have performed very strongly that day, which are the top gainers or which are the top losers. It's also incredibly friendly for those who do love dividends. You can see a lot of information. For example, what is the yield on cost? You can see which companies are actually driving not just the dividend within your own portfolio, but also the growth, and also understanding whether or not some of the companies that you do hold have some risky dividends. It also shows you the average annual growth, which is very interesting to note. One of the cool features features here as well is that you can compare your portfolio over long term against the S&P, and for maybe those that want a bit of inspiration about what companies they should consider, we also like the detail that it goes into for each company, not just the high level metrics, but you can take a look at the income statement. It also has information on the balance sheet, the cash flow, as well as many statistics which we do like to cover here on the channel. So you can click below, and the great thing is right now you can grab a 14 free-day trial. Now, one of her most recent AI stocks that she added was in fact Broadcom, where she exercised 200 call options, giving her 20,000 shares. Now, the S&P in this time is up around 9.5%. Since then, her position from purchase of Broadcom is up 48%. So you can already see why people really want to pay attention to what some very popular members of Congress are doing. And we can see here she has added quite a significant amount, therefore making it one purchase to take note of. But it's also one, as we highlighted earlier, members of Congress themselves are continuing to add. And yes, we are talking about it being very near to its all-time high. In fact, Wall Street still maintain this as a strong buy alongside members of Congress. We'll also touch upon the valuation of each of these stocks and what the large institutions are doing. But in the last year, the company is up 150%. In the last 5 years, 935%. And in the last 10, this one massively outperformed the S&P, up 2,800%. Now, if we solely look at it from a forward valuation of 44, it is well above the 5-year of 18.2. This in pure isolation, which we don't look at it, but we always like to have a quick glance, would tell us it is severely overvalued. Couple that with the yield now at 0.6%, much lower than the 5-year average of 2.7. Both of these, in our view, indicates potentially severely overvalued. And that is the conclusion when we take a look at the blue tunnel. Remember, parameters here highlight the intrinsic or fair value. Whilst it has been increasing in the last 12 months, we notice the share price continues to trade well above even the upper end, and the disparity now is getting extremely significant. Another cause for concern if you are someone that is looking to add to the position or making it a new buy. We have, however, noted members of Congress are adding at these levels, and if we actually zoom out to the last 5 years, this is one from mid-2023 that has just gone very crazy on a significant run and has been trading in that overvalued level. Yet it is one institutions alongside Wall Street who believe it is a buy, alongside members of Congress do love indeed. 77% ownership, selling $46 billion in the last year. But just look at the contrast in the same time frame. They bought $253 billion, as well as in the most recent quarter, 38 billion buys, 10 billion sales. Definitely one they are very bullish on, they are net buyers on, and if you wanted the reverse of the trend, well, in fact, you would have to go quite some way away. We're talking in 2022, we do notice still more buyers than sells, so we'd still have to look into 2021. Now, our valuation of the company gets to $258 derived from the DCF. As you can see here, we have the average growth 33%. We've gone 20% for the longer term. Most recent one was in fact 10. We have a low, medium and high growth rate, 15, 20, 25. As always, numbers here are subjective. You can grab a copy of this model by clicking on the pinned comment below, running through your own numbers, whether it's for Broadcom or any others. But what this flags, on a reverse DCF, given the current market value, 25% of growth is already baked in. So if you believe this is too high, straight away overvaluation. If you believe too low, very conservative, then potentially undervalued. So we get our growth rate and the discount rate to give us the present value of future free cash flow terminal price, add together with the cash, subtract total debt, get to the equity value, divide by shares outstanding, getting to 258, indicating downside of 30%. Full transparency will show you at 15% it comes to $179, indicating downside of 51, and as we highlighted earlier, at the 25% that is pretty much where we see this growth baked in, so no upside, highlighting pretty much its fair value. Now, typically on the channel, we like to take through the middle rate to get to our margin of safety, which clearly this company has none, given our intrinsic price is well below the current value, meaning we see a 42% premium in the value today. Wall Street themselves, even with their strong buy rating, see this at $375 into next year. We're talking very minimal upside of 2%. Now, for those that believe we are being very conservative and want to see this at the 25%, clearly there is no margin of safety trading at its fair value, but if you want to note a 10% MOS, which is typically what we would say is a buy if it meets the 3 golden criteria: wide moat, strong financial metrics, good forward-looking data, then a buy at $330, and at 20% sitting around $293. Finally, at 25, $275. First stock then, Broadcom. Also give us your views whether you believe, like members of Congress, like Nancy Pelosi who bought not long ago, and institutions who continue to buy, if you likewise see it as one. Before we continue, just to let you know, we have released our latest free weekly article. We drop one every single Monday morning to your inbox completely for free, where we cover severely undervalued stocks as well as what's gone in the market over the last few days. So click below, you can sign up and read straight away, where you'll be able to gain access to severely undervalued stocks for the month of September. Lots of information for each one, the upside that Wall Street themselves see over the next year, and on top of that you can grab a spreadsheet of 29 stocks that Wall Street themselves believe have the most upside in the S&P right now. So click below, you can sign up and read straight away. The next stock members of Congress continue to pile into is Nvidia, up 64% in the last year, up over 1,000% in the last 5, up more than 30,000% in the last 10 years, trading very near to its all-time high. We get a strong buy from Wall Street again, and a buy this time from Seeking Alpha, where we notice the forward PE sits at 32. That is quite some way below the average of 41, something we didn't see from Broadcom, and is what we would say is a potential undervaluation signal. One that is also noted again, we see disparity this time from the bottom end, whereas Broadcom it was sitting above, another undervaluation potential point. And in fact, if we zoom out to the last 5 years, actually in 2025 this company to different degrees has been trading undervalued, and it's also one institutions like. Now they sit at 65% for total ownership, selling 107 billion, but they've bought more than 3 times as much in the same time frame. They bought a lot more than they've sold in Q2, and again one that they've consistently been net buyers of. If you want the reverse of the trend, well in fact we do see one point here, Q1 2024, but this one more often than not institutions do love, and they love it a lot. Now we actually have 2 intrinsic values for Nvidia. We have one here at $164 and another at $178. If we just do a quick look at the first model that comes to 163, ultimately what we're doing here is just using 2025 and then using this next one based on our growth rate. Now last 5 and 10 years we're talking triple digit growth, 2024 to 25, 125%. We've gone 20% moving forwards. Do note on a reverse DCF we get to 21.2% baked in today, and intrinsically this doesn't give us a very large premium like we saw for Broadcom, sitting somewhere around 9%. Wall Street themselves see this at 210 into next year, indicating 18% upside. And if you wanted a price target based on this model, well at 10%, a buy at 147, at 20%, 131, and at 25, sitting at $123. The next model, all the assumptions are still the same except for the future free cash flow for 2026. We've ultimately extrapolated their Q1 and Q2 free cash flow, so you could argue this one is in fact maybe a little bit more accurate, where what we notice here is 20%, the middle rate today, is essentially what is baked into the value moving forwards, meaning you're not paying a premium, you're not getting a margin of safety. We see Nvidia today trading at its fair price. On these assumptions, 10% MOS would be a buy at 160, at 20% a buy at 143, and at 25 sitting at $134. Wall Street, as we said, see 18% upside with their strong buy rating. Members of Congress and institutions and Wall Street all buying and see this as one to continue to add. Let us know on stock 2, Nvidia. The next one is Lam Research. Haven't talked about this one in a while, up 47% in the last year. another significant outperform of the S&P, trading at 52-week and near all-time highs of 108, with a double buy from Seeking Alpha and Wall Street. We get a slight overvaluation signal, forward P 25 versus 21, yield slightly lower, investors today getting 1% versus average of 1.1, but we do get a slight overvaluation signal. Nice to see intrinsically increasing, but as of today, trading price slightly above the upper end. If we zoom out to the last 5 years, actually you did have some chances to get this severely undervalued in both 2025 and 2022, but always remember to subscribe, hit the notification bell button. When we see high quality companies trading severely undervalued, we will let you know. Institutions clearly like this, 85% ownership, selling only 5 billion, where they've bought more than 10 times as much at 57 billion. They've bought more than 3 times in Q2 and continue to buy quarter over quarter over the larger period. So again, another one institutions really do like alongside members of Congress. And our intrinsic value, $110, the average of the 4 that you see, which as always, you can grab a copy by clicking on the pinned comment below, gives rise to a very, very small margin of safety of 3%. If you wanted 10, it would be a buy at $99, at 20%, a buy at 88, and at 25, sitting around 83. Wall Street themselves, limited upside, even with the buy rating, 115 into next year, 7%. Let us know, Lam Research, 3% MOS, 7% upside. Do you see this as a buy, hold, or avoid? The next buy we have here is Advanced Micro Devices, up 12% in the last year, year to date up 32%. Over the last 10, we're talking about companies that really outperform the S&P on a little bit of a pullback from 52-week high of $187. Triple buy, that's the first we've seen today, right across the board, where whilst we get a D on the valuation because the forward P of the sector sits much lower, so you're paying a 71% premium, but actually also trading very marginally higher than their 5-year average by around 4.5%. But on a price to earnings growth, one we do quite like to look at, and we notice 1.33, below 1, we would say serious consideration. Below 2, definitely a further look. That is below the sector of 1.8, 27% discount, not too much higher than their own 5-year, 10%. So that does look good when we incorporate the future growth. And surprise, surprise, another one institutions love, 71% ownership, 22 billion selling, 27 billion buying, and we notice around 3 times as much buying in Q2 as opposed to selling. Now our intrinsic value, $162 derived from the DCF, is based on a 20% growth rate moving forwards. Baked in is just slightly below that at 19.5, and this now gives rise to a margin of safety. Very small though, we're talking 3%. If you want this as a buy, 10% MOS, $146, at 20%, $130, and at 25, we're talking 121. Wall Street themselves, with the triple buy across the board, have a price target of 185 into next year, 18% upside, but let us know your views on Advanced Micro Devices. Is this right now, given the slight pullback, a buy, maybe a hold, or a complete avoid? And then we move on to Microsoft. Yes, up 21% in the last year, up 19% year to date, and outperformed significantly in the last 10, but on a bit of a pullback, down 10% from 52-week high. A strong buy from Wall Street, very respectable, 4.73 out of 5. A buy from Seeking Alpha, and actually a forward P that isn't too dissimilar to the 5-year average, so we would call this reasonably valued. Something that is also confirmed when we take a look at the blue tunnel, which has been increasing, sitting around the midpoint. Now that feels like it hasn't been around this level for quite some time, but actually it has. In fact, in the last 12 months, it hasn't really traded above. There was that period, Liberation Day, where it was sitting below. And in the last 5 years, this one on very rare occasions shows itself as severely undervalued. And again, no surprises, institutions, 71% ownership, selling 111 billion, buying more than 3 times that much, and buying way more in quarter 2. Actually feels like institutions quite often, quarter on quarter, buy a lot more than they do in fact sell. So one of those that we would say is an institutional favorite. And our intrinsic value, $501, derived using a growth rate of 16%. Again, quite a few that we've seen today is pretty much what is baked in at 16% over the longer term. You need to see this around 18% moving forwards for upside of around 15%. But using that middle rate, trading at its fair value, 10% MOS would be a buy at 451, At 20%, a buy at $400, and at 25, around $376. Now, this is a company that you could argue actually deserves to be bought at its fair price or even a slight premium, so maybe one investors will dollar cost average. Wall Street, with one of the larger upsides today, see this at 624 into next year, 24% upside, but do give us your views. The next one is Meta Platforms, members of Congress loading up 49% in the last year, up 183 in the last 5, 700 in the last 10, trading near 52-week high at just below $800. Another strong buy from Wall Street, a buy from Seeking Alpha, and we can see this one slightly above the 5-year forward P, 26 versus 23, which does give rise to that overvaluation signal, but do bear in mind just slightly above. Again, in the last year, this did give you a chance to buy this around $500, Liberation Day, severely undervalued. But actually this one, if we go back to 2022, actually gave investors an incredible chance to buy this. We're talking around the $100, $200 mark, and looks like institutions also love it. 80% ownership, sold $64 billion in the last year, bought 3 times as much, bought a lot more. We're talking 6 times in quarter 2, and again another one institutions just cannot get enough of, where in fact our intrinsic price of $806 is derived using only a growth rate of 12%. Many investors will believe we're being way too conservative. 11% is what is baked in today, so anything above that, if you believe this is too conservative, looking undervalued. In fact, if we use the middle rate at 14%, we're talking $927, upside of 23%. So using the low rate, we want to be a bit more conservative with this company at $806. It is giving rise to an MOS of 7%. If you wanted 10, well, a buy at 726. If you wanted 20, we're talking 645, and 25 around the $605 mark. Wall Street see this 873 into next year, 16% upside. But if you believe we're being too conservative and want the middle rate of 14%, $927, well, Wall Street's target stays the same, but you are getting a 19% margin of safety. So do let us know on Meta Platforms. The next stock they've been buying is Amazon, up 28% in the last year, although year to date they're only up 5%, lagging in fact the S&P and the majority in the Mag 7. Over the last 10 years, like the rest of the companies today, significant outperformance on a very marginal pullback from all-time highs, but we get another strong buy from Wall Street with Seeking Alpha giving it a buy. Now on a valuation perspective, they get a D given the forward P of 35 is above the sector of 18, meaning you're paying a 94% premium, but against their 5-year average, you're actually getting an 80% discount. One thing that maybe is better to look at given the growth of the company is the PG ratio, which sits around the 2 mark. Now it is above the sector of 1.77, so you're paying a 12% premium, but as in our deeper dives, Amazon definitely does justify the premium, and around the 2 could be one for further consideration. Now institutions themselves, 72% ownership, selling $76 billion worth of shares in the last year, but buying a lot more. We're talking more than 3 times, and they've also bought in fact a lot more in Q2. Definitely a company where we know institutions are continually net buyers over net sellers, so one that we can't see institutions getting bearish on anytime soon. Now our valuation gets to $228, which is derived using a growth rate of 20%. Again, like most today, on a reverse DCF, that is pretty much what is baked into the value. If you believe it should be higher at 25%, well, 40% upside, but using the middle rate, we pretty much see this trading at fair value. Wall Street, with their strong buy, see this at 266 into next year, 16% upside. If you want a margin of safety of 10%, well, a buy at 206. At 20%, we're talking 183, and at 25, around the $171 mark. For those that believe we're being way too conservative, believe 25% should be most appropriate, well, the price therefore becomes 323 with 29% as a margin of safety. So let us know about Amazon. Do you believe institutions and members of Congress and in fact Wall Street are correct? And this one is a very strong buy. We then move on to Google, which is up 61% in the last year. Had quite a strong run recently, year to date up 26%. Like every company today, big outperformance, and it's trading very near to all-time highs, where not only CK Alpha and Wall Street give this a buy. Remember, Wall Street 4.44, very near 4.5 to flip them into the strong buy rating. And now we notice for the first time an overvaluation signal, forward P above 24 when historically it's been below 22. And that is also something that is surfaced when we look at the blue tunnel. For the first time in the last 12 months, this one is trading slightly outside, although lots of periods of time in the last 12 months where you could have got this severely undervalued. And that's also reflected when we zoom out to the last 5 years, mainly because Google seems to be a company that the market does misprice quite often. But institutions continue to load up, 40% ownership, 58 billion worth of selling, 127 billion worth of buying, and again 3 times more buying in Q2. You'd have to go all the way to Q2 2023 to see the reversal. And our intrinsic value, $229 derived from the DCF, is using a 12% growth rate. Again, very common theme today, reverse DCF, not too dissimilar from our middle rate, which actually gives downside of 4%, ultimately telling us if you're buying today, you are paying a 4% premium. Now, if you agree but want to see this in fact at a 10% MOS, a buy at 206, at 20%, we're talking 183, and at 25, around the $172 mark. Now, Wall Street themselves actually see this around the same price into 2026. That is why we get downside of 2%. So it has run up quite a lot. Maybe there is still a lot of upside to come, but at least in the shorter term, it does look to be fairly valued. Maybe you disagree and you believe this one should be looked at from a 14% growth rate moving forwards. Well, actually, the story changes a little bit and gives rise to a 9% MOS. Wall Street target, though, does remain the same, and give us your views on Google overall. Don't forget, as always, to sign up to the free weekly newsletter, grab those spreadsheets, come and join us at Patreon, where we cover our buys and sells, and as always, have a great day. We'll see you all on the next one.